Hi there, traders. This is Brad Goodwood with the Daily Market Insight for Friday, the 10th of November. All right, as we come into the Asian session, now the key theme, the US dollar is slightly higher, right? And that comes after Jerome Powell warns that the Fed is not confident that interest rates are yet high enough to finish the battle with inflation. Now, it's a long cry from saying we're going to raise rates again, but they're just saying that, you know what, on the measure of things, they aren't sure, right? Which is pretty good for a central bank to come out and sort of state that. Usually they're a bit clearer. Now, what are we looking at? What's that done for us? Well, the prices of the US Treasuries has gone down, which means the yields have gone up, right? So that puts upward momentum on the US dollar. Now, the currencies as they stand, now these haven't long been reset for the next trading day. So you can't see it very clearly, but the US dollar, okay, if I come over to the charts, probably a little bit clearer, has gone up on the day, right? So you can see the dollar index just slowly climbing high. It's not like massive. Once again, it's not a confirmation that the Fed are raising rates. He's just saying, you know, we're just not confident. So a little bit of a squeeze higher. And this week, without all the serious aggressive numbers, don't forget, we've got US CPI numbers next Tuesday. That's the answer that the Fed will be waiting for. We have seen the dollar just slowly move back higher, right? This is a little bit of unwinding of the last Friday's non-farm payrolls week numbers, okay? So seeing a little bit of a drop down here in Euro, Sterling, Aussie, and Kiwi, all right? And so that's where we sort of sit at the moment. There's nothing more you can do to sort of push things around. It's as I've been saying it all week, it's one of those weeks that's a little bit odd. There's a little bit of sort of spooky things, and that's primarily because, well, it should highlight to you the fact that this is where the economic fundamentals come into play and really give the market life. Now, where's that life going to be today? Well, UK GDP numbers, right? Industrial production, manufacturing production numbers, also very important. So keep an eye on, obviously, sterling and the sterling crosses as we come into the European session in particular. Then as we come into the North American session, or at the end of the European, you've got Christine Lagarde speaking, the ECB president. You want to keep an eye on that. And the University of Michigan consumer sentiment numbers. Now, these have shown us in the past the ability to move the market. And that's all we've got to work with, right? So if you're sitting there wondering what you're going to be doing today, is it a day where you can sort of just drop in and out and sort of try and make some cash? Well, maybe, but what you need to be doing is watching very closely what's going on with the equity markets. And at the moment, we are seeing like a risk-off sentiment on the equities. And this goes with the higher US dollar, potentially higher rates, lower equities, right? And that's a higher US dollar. And you'd expect the Euro, Sterling, Aussie, Kiwi to be going down, but they're not just at the moment, right? As I said, these the stats here on the currencies reset at 5 p.m. New York. So let's just see how it plays out. As I said, sterling is going to be the main game. So if you do have some sort of template, have a look across the technicals across your sterling pairs. That's where trader focus will be, right? And as I said, next Tuesday, like you should already be planning, if you're not already, next week's trading, right? And if you just flick over and check out Tuesday, right? Obviously, the CPI numbers in the US, huge, but we've got numbers across the board, okay? Consumer confidence, business confidence numbers out of Australia, unemployment numbers, average earnings in the UK, employment GDP in the Eurozone, and there's EDW numbers. Like Tuesday is like wham, bam, packed with data, right? Everything's going to be on the table, in particular with the US CPI numbers, right? So this is the focus. We need to work out how we're going to get to next Tuesday, right? So that's what I'm talking about. Have a look through the market. If things aren't connecting for you, it's because things aren't connecting, right? So keep an eye on sterling. And then also, as I was just saying, keep an eye on the various markets, right? Because the bonds are back in play, right? And this is just following Jerome Powell's simple comments that they, you know what, they're not super confident that interest rates have topped out yet. All right. And that's what you're looking for. So I would think for the day, US Treasuries to close the week, the bonds are going to be in play. And that should give us a little bit of upward pressure on on the dollar, which if you're looking to connect with sterling, just on the basis of that, you would be thinking, and let me just get the pen up, like if we think US bonds are slowly going up, means the US dollar is going higher, which supports a lower sterling. So what do we need out of the sterling for the easiest trade? Weak numbers, right? Weak GDP numbers, weak manufacturing production numbers, and that would see sterling easily just cruise to the downside, basically correcting all the impact of last Friday's US non-farm payrolls. And that sets us up for next week. All right, so that's a little bit of an insight into how I would be sort of looking at it. And that's pretty much it from here, guys. It's, as I said, it's been one of those weeks where we've been sort of waiting, and there's nothing really, as I keep saying, to hang your hat on or get your teeth stuck into, but we will have it next week. All right, so today I'd say reduce your risk, look for some cash if you can, but you know what? You don't want to dig a little hole leading into next week's big potential. All right, guys, that's it from me. Have a good one. All the best. Cheerio.